Good evening and welcome to Asian Paint's Investor Conference for Q1 FY19 results. With me we have Mr. Qtr Anand, MD and CEO. We have Mr. Jayesh Merchant, who is the CFO and Company Secretary, and also the President of Industrial JV. We have Mr. Manish Choksi, who is President International, IT, HR and Chemicals. We have Mr. R.J. Jayamurugan, VP Finance, and Mr. Parag Rane, Chief Manager Finance. Now, may I ask Mr. Qtr Anand to take the call forward.
Good evening, everyone, and welcome to the Q1 FY19 conference call for Asian Paints. If you look at the economic environment, the recovery trend in the domestic economy witnessed over the last couple of quarters continued to extend to the first quarter of this financial year. However, while the recovery continues to gather pace, demand conditions for the paint industry still remain challenging. At the global level, while major economies continue to show resilience, there are lingering uncertainties over the horizon. Hardening inflation and the resulting tighter monetary conditions, elevated crude oil prices, heightened trade barriers are dampening the business confidence across. The consolidated financials Q1 FY19 revenue from operations increased by 15.5% to rupees 4,398.6 crores from rupees 3,809.8 crores. PBDIT increased by 25.9% to rupees 936.1 crores from rupees 743.7 crores. PBT increased by 29.7% to rupees 848.3 crores from rupees 654.3 crores. Net profit after non-controlling interest increased by 30.6% to rupees 558 crores from rupees 427.4 crores. Standalone financials, revenue from operations increased by 16.2% to rupees 3,706.2 crores from rupees 3,188.73 crores. PBDIT for the quarter increased by 30.8% to rupees 893.7 crores from rupees 683.2 crores. PBT increased by 34.3% to rupees 810 crores from rupees 603.1 crores. Net profit increased by 35.3% to rupees 542.6 crores from rupees 400.9 crores. Please note that the figures for the previous year have been suitably adjusted to bring them in line with post-GST financials. Looking at the decorative business, the decorative paint business registered a good double-digit growth in the current quarter, helped to an extent by the low base in the first quarter of the previous year. On a sequential basis, material prices have been moving up, and we took a price increase of 1.9% in the month of May 2018 to negate the input cost pressures to an extent. This is on the back of a 1.4% price increase effected in the month of March 2018. Reviewing industrial business, the automotive joint venture PPGAP witnessed good growth in the general industrial segment on the back of strong performance in the two-wheeler and commercial vehicles industry. The auto refinish segment, which took a beating last year due to the GST rollout related issues, saw a good offtake in the current year. The industrial coatings JV APPPG registered good growth in the quarter, led by a strong performance across business segments. Profitability in both the segments was, however, affected due to the rising material cost pressures, which could not be passed through completely. Reviewing the international business, overall the international portfolio faced challenging business conditions across major units. The high inflationary situation continued to affect demand conditions in Egypt. Forex unavailability continued to hurt operations in Ethiopia. Incessant rains affected sales in current quarter in the key units of Bangladesh and Sri Lanka. The fledgling operations in Indonesia continue to gather pace, and the unit has done well to expand its retail network and market presence. Reviewing the home improvement business, both the segments within the home improvement business, the kitchen business under Sleek and the bath business under SS, have registered strong growth in the current year. Both the businesses continue to expand the network to increase the scale of business. The capex plan for the standalone company for the current year is around rupees 1,000 crores. This includes a spend of rupees 800 crores on the 2 new paint manufacturing facilities being set up in Mysuru, Karnataka and Vizag, Andhra Pradesh in South India. The first phase of both these plants will be commissioned in this financial year. Going forward, as mentioned earlier, growth in the current year was to some extent helped by the low base of the previous year. We are hopeful of a further recovery in demand conditions as we enter the festival season. The GST rate reduction from 28% to 18% on paint should also help demand from the small consumers, and the company is taking steps to pass on the benefit of this rate reduction to consumers. However, we see a continuing increase in raw material prices and expect an inflation of almost 10% in the second quarter on the average of last year's raw material costs. We have passed on only a part of this through the cumulative 3.3% price increases taken in March 18 and May 18 and should have ideally looked at a further price increase. However, we may need to defer it due to the GST rate reduction. In the international markets, continuing difficulties in sourcing the forex for business operation in Ethiopia continues to be a key concern. Thank you, everyone. We are happy to take any questions you may have.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, congrats on a very good set of numbers. My first question is on your statement, ideally should have taken price hike but deferred due to GST rate cut. So does it mean you will pass on the entire, say, 10% and because of the clauses of, say, anti-profiting, etc., you may not take price hike which is warranted? So there could be margin compression in the coming quarter?
If we take a price hike, immediately we'll come under the lens of the anti-profiteering bureau, so to speak. So we would have to defer it and recover costs over the rest of the year.
The second is, you had pointed out Tamil Nadu slowdown in the previous quarters and competitive intensity being high. On these 2 parameters, what is the status?
The competitive intensity continues to be high, but there is a recovery.
And so when I see there's a recovery because of any particular reason?
No, I think the market has improved itself.
So your other spends is seeing a very low inflation, which means the ad spend also would have seen a very low single-digit growth. Does it point towards lesser competitive intensity or it is just your phasing of the ad spends?
We haven't phased out ad spends.
But it has seen only 2 to 3% growth, other costs.
Yes, other costs. On marketing spends, they actually see a good double-digit growth, specifically in terms of marketing spends. But some of our other costs, especially the larger costs like freight, rent, they are seeing a slightly lower inflation as compared to the previous years. In Q1 for the current year. But with the way the fuel prices and retail prices of fuel are behaving, maybe Q2 onwards we might see a higher impact. But in Q1 we had a lower inflation on these key costs.
Sir, on your smaller businesses, Sleek and SS continues to grow much faster than Sleek. This quarter also 56% versus 17% for Sleek. So what's the thought of reviving and taking Sleek to the next level? Last 7-8 quarters, it's broadly in the 35 crores to 50 crore range, quarterly run rate. So if you could talk about why such a big difference in terms of growth rate. Is GST impacting Sleek? Is there a reverse shift in Sleek?
No. Amnish, you are looking at the numbers which are previous year has this excise duty element. We have given the correct, in the notes to the accounts, we have given the right numbers, comparable numbers. See,
I'll have a look. But any comments?
Sleek has also grown at 22% in this quarter.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Avi Mehta from India Institute. Please go ahead.
Hi, sir. I just wanted to clarify the statement that demand from small customers is likely to benefit from the GST rate reduction. Are these self-painting guys? That's why you're expecting that? Or if you could just explain what...
There is very little DIY in India, so there is not really self-painting. But the gap between, you can say, the organized sector and the unorganized sector was much higher. That would reduce.
Okay, so you mean that it essentially is got to do with market share gains in that category is why you are saying? Is that what you're referring to when you say demand from small customers?
Partly yes, and when the cost of paint and painting itself sort of reduces, we anticipate demand to improve.
Okay. So there would be some, you're saying some impact from the price reduction on the general demand plus market share gains. Is that a fair understanding, sir?
Yes.
Okay. And sir, secondly, just on the GST rate reduction being passed through, just wanted to clarify and confirm you have the ability to pass it on differentially across different categories that, higher premium products might see a higher reduction. Is that something?
So it will be a 10% reduction in the GST rate per se. So we operate with a certain dealer price list to our entire dealer network. That continues to be the same. The GST is simply reducing from 28 to 18. So there's a straight of 10% reduction in the effective cost to the dealer network and consumer across products.
Oh, and
on the maximum retail price, but most of our products do not sell on the maximum retail price. So the differential may vary to some extent.
Okay. And lastly, sir, on the dealer margin itself, because of this reduction in GST rate, would you be able to kind of weigh or kind of work on those numbers, reduce it to some extent, or you would not want to you would want to let the margin be enjoyed by the supply chain? Because you would have increased it when there was a slight increase in tax rate, right?
No, we really can't control dealer margins because we have an open network policy with a large number of dealers in each city. And except in the very small villages and towns where there are, you can say, monopolistic dealer networks, we really don't control dealer margins at all.
Okay. So that I think is something that the market force will decide. That's okay, sir. Perfect. I'll come back in the queue if I have any other things. Thank you very much, sir.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Utsav Shah from Qtr1 Capital. Please go ahead.
Hi, I wanted to know when are the two plants expected to begin production that you mentioned in your CapEx expenditure for this year?
Mysore is expected in September and Visakhapatnam in January.
Okay, and could you comment on your capital utilization at the moment?
Around 75%. Around 75 to 80% currently.
Okay, thank you so much. I'll get back in the queue if I have any further questions.
Yeah.
Thank you. Next question is from the line of Lakshmi Narayanan from Catamaran. Please go ahead.
Thanks for taking my question. I have two questions. First is, I joined a part of the late, so you mentioned the transition from the unorganized due to the GST. So what portion you think would benefit the industry? That's my first question. And second, you also mentioned that how the GST benefit is getting passed on in terms of when you actually build from your factory to your distributor, whether the price will get contracted. And the third question which I have is that I think that also...
We are not able to hear you clearly.
Yeah, are you able to hear me clearly now?
Yeah.
A little better, yeah.
Hello?
If you can speak a little slowly, then we'll be able to get your questions.
And actually, what you can do is maybe ask question one by one, so we can finish off with the first one, then we go for the second.
Yeah, is it better now?
Much better.
Yeah.
Yeah. So my first question is, you mentioned something about the unorganized paint manufacturers the proportion will shrink, right? So what kind of benefit do you see for the industry in terms of volumes?
This is more in relation to what we have observed in the 80s and 90s when excise duty was reduced considerably in the organized sector. Demand shifted gradually from the unorganized to the organized sector to extent. So it's very difficult to talk of month-to-month deviation. But over a period of time, we definitely see a movement from the unorganized to the organized sector.
Okay. What is it now currently in some segments to operate in, at least in the lower end? What proportion of volumes?
We are not able to hear you. Your voice is very garbled.
Mr. Narayanan, we request you to move to an area with network. Your voice is cutting off, and possibly use the handset.
Is it better now?
A little better.
Hello?
Yeah.
So my question is that what percentage of unorganized is there in the segment we operate in?
I'm sorry to interrupt you, Mr. Narayan, but we are still unable to hear you. We request you to call back maybe from a different device, as we cannot hear you very clearly. Mr. Narayanan? We'll move to the next question. Next question is from Amit Sachdeva from HSBC. Please go ahead.
Hi, good evening, sir, and thank you so much for taking my question. Sir, my question is on GST. As you put a note in your release that, that it will be difficult to take price increases since GST has reduced, and even though the input prices tend to have moved up quite significantly. My question is why it is difficult for someone to understand that GST is applied on the invoice value and then your price increases linked to input price increases that you face as an industry. Why you have to have such a dilemma that why input prices cannot be passed on to product which especially had a higher oil linkage versus some which have lower oil linkage, and why it would be such a seen as a profiteering move, especially in your industry when it is a known fact that input prices has been so high. Why you would sort of make such an assertion?
So, it's partially anti-profiteering plus confusion of pricing among the entire vast dealer network. We have more than 52,000 dealers across the country. So, varying rates and getting them settled takes a little time. So, to take at least a month for the new GST to really get implemented effectively, post which we can consider. But since time would have elapsed, it will have an impact.
And second question, Mr. Anand, would be that, obviously time to time you would run separate schemes also based on various product lines. And this obviously would mean that price increases in reality would vary at your will anyways. So would it not be fair to say that if, for example, where the input price inflation is low or high, you could use this leverage to push a certain volume more than others? And hence, which somebody also asked that actually realized price for various goods can actually quite substantially vary when GST rate is being implemented.
So the level of inputting we do is considerably low compared to the price increases we are talking about. In addition, a lot of the input is directed toward the end consumer or the trade, painters, etc. So, it's a mixture. You really can't fully cut one off from the other.
Okay, understand, sir. Understand. Perfect. Thank you so much. Congratulations once again for a very good set of numbers.
Thank you. Next question is from Vicky Punjabi from JM Financial. Please go ahead.
Hi, this is Richard here. Thanks for taking my question. So I just want to understand, the more the profitability of the non-domestic decorative business, and the way I'm looking at it is really the difference between the paint segment in console and the paint segment in standalone, which I guess represents industrial and international together. So if I look at this, steady state margin here used to be about in the range of about 10, 12, 14%, and that has come down significantly to about something like mid-single digit. What has helped? How has this happened, and what will trigger a reverse move on this?
So, in decorative in India, we are market leaders and we have the ability to transfer raw material prices immediately or in advance, so to speak, and hence take care of inflationary environment much more successfully than we can do in either the industrial market or in international markets where we are not the market leader. there it is incumbent, we are to some extent dependent on how the rest of the market reacts to increasing raw material prices. Due to a relatively subdued demand in many markets, for example, Egypt, Middle East, etc., many of our competitors there have not taken to increasing prices, and we have not been able to take the price increases we so desired, or at least to the extent we desired across markets. So the lag effect is definitely there in an inflationary scenario. The previous couple of years, you had a sort of a deflationary scenario where the advantages were obvious and you could maintain a higher margin much more easily.
Plus, you have a situation in Ethiopia where our ability to source forex has in absolute terms reduced the business, and obviously also in the absolute terms impacted the total profit contribution, and Ethiopia was a reasonable profit contributor. So all these three factors have sort of impacted this, which is slower demand, our ability to raise prices, as well as a one-off situation in Ethiopia where we are unable to source forex and thus absolute returns are down.
And so suffice it to say that this impact is more from the overseas business than from the industrial business.
Industrial business also, but you're right.
To some
extent, the overseas business is much larger than the industrial business. The impact is going to be much more significant there.
And is there any trigger for a reverse move in this other than raw material prices itself cooling back?
No, I mean, gradually we expect competition too, and we have started the process of increasing prices across markets. So it will come back, but see, you're in an inflationary scenario. As you are increasing prices, you're finding raw material prices are continuing to increase further. So it's not a status quo situation where you can really play catch up so easily. It's a fluid market where there are varying dynamics.
Okay, got it. Thank you very much. Wish you all the best.
Thank you. The next question is from Vivek Maheshwari from CLSA. Please go ahead.
Hello, hi, good evening everyone. My first question is the 3.3% price hike that you took until May, did that pass on all the cost inflation?
No. So it passed on the cost inflation till Q1, not what has risen in Q2 since.
Okay, which is what you have quantified as 10%. So 10% is something that is incremental.
10% is what I've said is over last year average for the full year. Now, we have taken 3.3 or 3.4% over that, already out of that. It's the balance we would have liked to have taken. We have to determine when to take it.
Sure. Which means that, until May, June, all the cost inflation has been passed on.
Yes.
Okay. And I know you don't give these numbers, but can you just, qualitatively indicate the premium part of the portfolio growing faster or, in line with the base portfolio?
Sorry, you know my answer already.
Okay. And could you quantify when you say, you gave an example of 1980s excise duty reduction. So today, what will be the size in terms of, let's say, percentage of the unorganized market at the moment?
So a Nielsen study which the IPA has published talks about around 30% of the market being the unorganized sector.
30%. And that 30% number is volume or value?
Value.
Sorry?
Value.
Okay, value. And lastly, because of, let's say, a 10 percentage points price reduction, would you also expect uptrading in the category? As in premium products being, more affordable and therefore customers, going for that?
It's very difficult to anticipate that. There could be some uptrading, but it's very difficult to talk about that as yet.
Okay, all right. Thank you and wish you all the best.
Thank you. Next question is from Srinivas Seshadri from Mirabilis. Please go ahead.
Yeah, thanks for the opportunity, sir. I had a couple of questions.
Mr. Shishati, we can barely hear you. Please, if you could speak a little louder.
Is this better?
Yeah.
Hello? Yeah.
Yes.
Okay. Great. Thanks for the opportunity. I had a couple of questions with respect to the new capacity coming in Mysore and Vizag. I believe that's the first phase itself had around 50% to the current capacity, if I'm not mistaken. So typically when you ramp up these capacities, is it like, and obviously the market is growing at a phase, and if I understand correctly, being a process plant, you would kind of try to utilize capacity in an optimal manner from day one. So how do we think about the overall capacities getting balanced through the existing plants? And also, does this substitute for certain, do you also source something from outside in terms of manufacturing, or how does this kind of overall thing work, sir? That's one. And secondly, as a result of that, would there be any kind of meaningful savings in terms of logistics costs or any other costs for you as a company?
So the second part is easier. There would be logistic savings since these plants are closer to the markets where we have inadequate capacity currently. Setting up a plant is a fairly long process from the point of, searching from land, getting permission, setting up the plant, etc. So we really can't set up plants every day. And given our volumes, these plants' first phase capacity will last us only 4-5 years. It's not going to last us much longer. Secondly, paint manufacturing is more of a batch process and not a continuous process. So we will manufacture according to where it is most optimally beneficial in economic terms for the company.
And even if you look at the fastest ramp-ups, we will not be able to ramp up to full capacity, and we can only do it in about 2.5 to 3 years period of time. Even if we went on the most accelerated pace and did everything that we had to do and got everything right first time around.
Okay. And so if I understand correctly, you don't use any outsourced capacity at all, right, as a company?
We do for certain products. Some of the putties, primers we make outside. Some of the solvent-based paints we make outside. But that's more because of, you can say, economic reasons rather than anything else. Wherever we think the technology is important to us, we manufacture it inside the factories.
Okay, so this capacity doesn't really address that portion. That's a separate.
No.
Okay. And any possibility of quantification of the logistics and other savings because of this?
No. While we have done it, I don't have the figures in front of me.
Okay. Fair enough, sir. Thank you.
Thank you. The next question is from Anand Shah from Axis Capital. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So one question was essentially, would there be any fiscal savings from commercialization of these two plants?
There are certain tax benefits given by this government, both in Karnataka and Andhra Pradesh.
Okay, and these would be like state-specific benefits like the...
Yeah, state-specific benefits is relating to the sales made locally, manufactured from this new plant.
Okay, so sales essentially only in those specific states, which will have benefits.
Yeah.
Okay. And second, the inflation that you called out, the expected inflation in Q2, that the 10% is essentially you're expecting is on YOY basis.
YOY.
Yeah.
YOY average base of last year, 10% on that.
So the YOY index...
It's not quarter to quarter, but it's on the average of last year.
Okay. So average of last year YOY, it is 10%. And is there any significant mix improvement that would have happened, let's say, this quarter? Because, I mean, if I look at the standalone numbers and compare just the growth in cost of materials, and let's say just for a volume growth, I know you don't share volume growth, but if I assume a certain, mix and volume
division, let's say 13-14% volume growth and 2-3% pricing that way and do it, it seems the cost of materials have, for volume adjusted were largely flat. So, I mean, it looks like, this trajectory, for example, was much higher earlier, which has actually come down. So, this you are expecting sort of to, again, move up significantly. So, was there any mix improvement or any procurement benefit that would have kicked in this quarter?
Nothing undue.
Okay. Thanks a lot.
Thank you. The next question is from Kunal Bhatia from Dalal & Broacha.
Yes, thanks for the opportunity and congrats on a good set of numbers. So just wanted to know currently what is our mix of solvent and water-based and how have they moved? I believe in the last analyst meet you mentioned around 40%. So how has it moved over the past few years, if you could give?
What is 40%? Because I don't think I mentioned 40% anywhere.
Water-based.
I'll have to look at the recording of the previous analyst meet to come back to that. But
you can do so.
We don't give the mix, but definitely over the last 2 decades, water-based is growing much faster than solvent-based. Our new plants are entirely water-based.
Okay, fine, sir.
Thank you. The next question is from the line of Lakshmi Narayan from Catamaran. Please go ahead.
Yeah, thanks for taking my question. My first question is regarding the GST change. You mentioned that there is some part of the price will be passed on to the customer. And typically, what is the for the end customer? What is the range of price reduction he can actually expect?
The entire tax benefit will be passed on to the customer.
So the MRP decreases will reflect the entire GST reduction.
And our bill to the customer based on our DPL will reflect the new rate.
Yeah. But how the dealer sort of passes it on to the customers is up to the channel on a case-to-case basis.
And so it means the dealer can actually enhance his margin also.
That possibility exists, but it is a competitive environment. So while that might occur for some very small customers, in most markets, it's difficult for the dealer to really increase his margin significantly.
Not by so much.
And you mentioned that there is a 30% is the unorganized, right, broadly. So that is more on the, I believe it will be more on the enamels or it will be in the, which segment it will be more unorganized?
Enamels and distempers definitely larger, but it is also there in emulsions.
And in industrials.
Oh, in emulsions also. Okay. So another question is that from the capacity you are setting up, you are almost setting up equal to your existing capacity, right? And which means that you are thinking about a particular volume growth for the industry. When I look at all the other players, including your top competitors are also setting up capacities, right? So, if you can just step back and just help me understand in terms of what is the volume growth you are expecting for the industry, and is this is it a time? Is this sometime it happened earlier also when all the players are setting up extra capacity, or this happens quite continuously every cycle?
I do not give projections. The Indian Paint Association is the best organization to give projections for growth for the paint industry. But given the past decade, what we are doing, like I said, phase 1 would take care of at best the next 4 or 5 years increase in production, in sales.
Okay. Then one last question is that you said you have around 52,000 touch points, right? What kind of growth that actually, how much that endpoint grows for us on a, if you look at 5 years back, what was that number and, some direction there?
Increasing about 3,000 endpoints every year in the last 4 or 5 years.
Okay. Fine, sir. And what is the total, the end, right? So you have 52,000 of some X, right? So that X is also increasing more, or
yes,
what is that?
X is, as urbanization is increasing, as cities are expanding, X is also increasing. So frankly, that figure is anybody's guess.
Okay. Thank you so much, sir. I'll get back in queue.
Thank you. The next question is from Avi Mehta from India Infoline.
Hi, sir. Hello?
Hello?
Yeah, sir. Sir, just a clarification, the deferring that you are saying, typically what is the time period for this anti-profiteering? Because, if you have any time period in mind.
I wish I had clarity on that. I would have told you. If you have any clarity, please help me.
No, sir, I'm reaching out to you for that only. That's it. So the second thing was the industrial segment. You have indicated that margins have come under pressure because of the input cost situation and the inability to pass it on. Does this rate reduction in any way help us in that or no? That would...
No, because the industrial segment was getting full GST benefit as a user.
Correct. So there would be no impact on that.
There's no impact of that. It's not that it takes a little time to negotiate with each OEM customer or each contract and increase in prices. There is always a lag effect. And in an inflationary scenario, what you negotiate, you find you have already negotiated less. So it's an ongoing process throughout the year.
Okay, fair enough. And that is where it the divergence creeps in. Okay, fair enough, sir. Okay, that's all from my side. Thank you very much, sir.
Thank you. Next question is from TV Bhattad from Aditya Investments.
Hello, good evening, sir. Sir, my question is regarding the new upcoming plants. What I wanted to understand is, will there be any manufacturing cost reduction due to the new technology which we will be using in the new plants?
May not be significant from the other newer plants, but on an overall basis, the average might drop.
Okay. Thank you, sir.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. The next question is from Tejas Shah from Spark Capital. Please go ahead.
Hi, and thanks for the opportunity. Sir, with such a sharp cut in GST rates, does it create any disruption at inventory level, at dealer level?
The disruption is in terms of that stickering, etc., has to be done for the new MRP across packs. And given that the range that we have small packs, big packs, and we sell such a large volume, it's quite a laborious, labor-intensive exercise, which has to be done very rapidly.
So do you need to change the price tag for the inventory at dealer level as well, or is it from the fresh stock that you send from here on?
We really can't do it at the dealer level, but we will instruct the dealer to do it at his level.
Okay. And sir, for last 2 years, we are picking up from various real estate sources that new real estate projects are under tremendous pressure. But volume growth for paint industry has remained robust. So are we witnessing any significant change in that historic mix in favor of repainting demand versus fresh painting?
Repainting has always been a major chunk of our business, as a matter of fact. So project sales was, you can say, new construction was a very small element in our overall business.
No, but sir...
that was more with the unorganized sector, really speaking.
Okay. But do you believe that small portion has become more smaller for us in industry as well?
No, I don't think so.
Okay. And so lastly, you mentioned standalone capex of 1,000 crore. What will be the number at consolidated level?
About another 200-300 crores, around 200 crores at a console level addition.
Thanks, and all the best.
Thank you. Anyone else who wishes to ask a question at this time can press star and 1.
Yes.
Next question is from Abhijit Kundu from Antique Stock Broking. Please go ahead.
Hi, sir. Thanks for taking my question. We need to know that there has been a decline in other income during the quarter. Any key reason? Because what should we build in for the year?
Because of the capexes that we are undertaking since last year on the 2 new plants, our investable surplus has come down to an extent. And the other reason is last year you had a rupee appreciation benefit flowing through the entire quarter, so you had a exchange gain, versus this year you have an exchange loss. So that's the reason.
Okay.
And, with regards to new plant, so one is that there would be 1,000 crore capex for the year, right? For FY19, there would the total capex should be about 1,200, 1,300 crores.
Okay. So 1,000 crores is at a standalone level, yes.
Right, and 1,200 to 1,300 crores at the consolidated level.
Yes, around 1,200.
For this year.
For this year.
1890.
Okay. So, the increase in depreciation should happen by the, as the plants come in September and then in January, there should be an increase in depreciation as well.
Yes.
Okay, sir. Thanks. That's all from my side.
Thank you. Anyone else who wishes to ask a question, please press star and 1 on your touchtone telephone. The next question is from Manish Oswal from Nirmal Bang. Please go ahead.
Yes, sir. My question on your comment on the international markets because of the currency issues, you're facing challenges in terms of growth. So, how the situation, whether it is remain similar or we can expect some improvement in the business going ahead?
We have only one market where we have currency challenges, which is currently Ethiopia. And we've had to pare our plans down for that particular market. So there, we don't know the outlook, but we should be able to do, maybe a little less than, a significantly lesser number in Ethiopia than what we did last year. Other markets are not impacted by availability of forex. They may be impacted by sort of depreciation in their currencies, and they are impacted by demand conditions that remain weak in the markets that we spoke of.
Okay. And the second question, it may be repetitive, but I joined a little late, so pardon me for that. In terms of GST rate cut, how do you see the impact of the demand of like-to-like basis?
So the demand, as we said, demand should increase in the medium term.
Okay. Okay. And lastly, sir, this home improvement business segment, how in terms of growth and the profitability, what is your outlook?
The growth has been extremely good in this quarter. We are continuing to drive for growth in the balance portion of the year.
Okay, sir. Thank you very much. Thank you.
Thank you very much. That was the last question in queue. As there are no further questions, I would now like to hand the conference over to Mr. KVS Anand, MD and CEO, for closing comments.
Everyone, thank you very much for participating in our conference call, and look forward to seeing you next quarter. Thank you.